Welcome to The Explainer. Today, we're diving into the Turkish Revenue Administration's guidebook on rental income tax. You know, if you're a non-resident earning rent in Turkey, this one is for you. We're going to make it simple.
So you own property in Turkey, right? And you're earning some rent from it while living abroad? Well, tax rules can feel a bit intimidating. But don't worry, we're going to break down everything you need to know step by step.
Here's our game plan. We'll start by figuring out if these rules even apply to you. Then we'll look at what income counts, the super important exemption amount, how to actually calculate what you owe, the whole filing process, and we'll finish up with the key takeaways.
Okay, let's get right into it. Before we even think about numbers and forms, we've got to ask the big question. Does this guide actually apply to you? It all boils down to whether you're officially considered a non-resident taxpayer in the eyes of Turkish law.
It's really just a simple 6-month rule. If you aren't living in Turkey for more than half of any calendar year, you're pretty much considered a non-resident for tax purposes. And hey, this also includes most Turkish citizens who are living abroad on a residence or work permit.
All right, now for the interesting part. When the tax authorities talk about rental income, you might be surprised at how broad that definition really is. It's not just about a flat or a house.
Of course, it covers the obvious stuff, land and buildings. But it also includes income you get from renting out your intellectual property. So yeah, if you're earning money from things like copyrights, patents, or even franchise rights, that counts as taxable rental income too.
And here is a really critical rule about timing. Turkish tax law runs on what's called the collection principle. In plain English, that means income gets taxed in the year you actually get the money. So let's say a tenant pays you in 2025 for rent that covers both 2024 and 2025. Guess what? That entire chunk of cash is considered 2025 income.
Okay, let's talk about what might be the single most important number in this entire guide. Seriously, this next figure is the magic number that decides whether you even have to bother filing a tax return for your residential rental income at all.
And here it is. 47,000 Turkish lira. For the 2025 tax year, if your total rental income from a residence, and that part's important, we're talking about a home, not a business property, is less than this amount, you are totally exempt, no return needed for it.
But, and this is a big but, hold on, there are a few catches. You can't use this exemption if you've got other kinds of income to declare in Turkey, like from a business, or if your total income from all sources blows past 1.2 million lira. And you also lose it if you just don't file on time. So being punctual really pays off here.
So what happens if your residential income is over that exemption limit? Well, your next mission is to figure out your taxable base. And the way you do that is by deducting your expenses.
The tax authority actually gives you two different ways to go about deducting your expenses. This is a pretty big choice, because whichever one you pick, you have to stick with it for all your properties. No mixing and matching.
So these are your two options. First is the lump sum method. It's super simple, a flat 15% deduction, no questions asked, no receipts needed. Perfect if you value simplicity. The other path is the actual expenses method. This is for all you detail-oriented folks who keep every single receipt for repairs, insurance, you name it. It's more work for sure, but it could save you a lot more money if your costs are high.
Now, you have to be careful with this rule. If you pick that easy lump sum method, you are locked into it for 2 full years. So think ahead. If you know you've got some major repairs coming up next year, going with the actual expenses method from the start might be the much smarter play.
All right, you've done all the math. You've calculated your taxable income. Now it's time for the home stretch, declaring that income and actually paying the tax. And trust me, the deadlines here are not suggestions.
Okay, pull out your calendars. For all your 2025 rental income, the window to declare it is the entire month of March 2026. Your first payment is also due by the end of March, and then the second and final payment is due by the end of July 2026. Don't miss them.
The good news is, this isn't some old-school paper shuffling process. The Turkish Revenue Administration has a great online portal called Hazır Beyan, which translates to the pre-filled tax return system. It's really designed to make filing as painless as possible.
And when it comes to actually paying, you've got a ton of convenient options. You can pay right on the official tax website, that's jib.gov.tr, using a credit or debit card, and yeah, even foreign cards work.
Or you can use online banking or just walk into a contracted bank or a post office branch if you happen to be in Turkey.
Wow, we've covered a lot of ground, haven't we? So let's just boil it all down into a super simple checklist. This will help you make sure you're totally on the right track when tax season rolls around.
Let's just quickly recap the 4 most important things. Number 1, confirm you're actually a non-resident. 2, check if your residential rent money is over that 47,000 lira magic number. 3, make your choice on expenses, the simple 15% lump sum or the detailed actual method. And finally, number 4, get that March 31st deadline burned into your brain.
And that's pretty much your guide to Turkish rental tax for non-residents. But hey, what if your situation is a little unique? Well, the guidebook leaves us with one final and honestly fantastic resource. You can email the official Tax Communication Center, also known as VIMR, directly, and you can do it in English. So what's the one question this guide left you with?